Hello, I'm Paul here. Today I'm going to be talking about the same strategy that I've been talking about for the last couple videos. Now, if you saw yesterday's video, I went over a strategy on using two paid indicators. That's using trade confidence buyers versus sellers, and the Ghost Market Pro indicator to kind of benefit crypto by looking at it with crypto. Today we're going to be looking at that same strategy, but we're going to be looking at Forex. I'm going to go into all the, I'm going to try and look into all the basic Forex pairs, and I'm going to apply this strategy. I'm going to start off looking at the day, and then we're going to go look and see some smaller time frames. Because, if you do this on the day, you might have to wait a while. So if you don't find the signal on the day, then you'll go to 6 hour, 4 hour, and then the 1 hour. But I don't do anything lower than the 1 hour with this strategy. Now there's one of these pairs I talk about in these videos where we do go to a lower time frame, but I'll talk about that in another video. But today we're going to be looking at Forex and how to apply this two paid indicator strategy to kind of work in your favor to find all the good moments when you're trading Forex. So I'm going to be we'll go over all the basic ones here. So I'll show you. Now, I'm not really going to teach you here the setup process. I made a video about that, so watch that one. It's about 2 videos ago. So watch that video. I show you how to set it up. Today, I'm really just going to be explaining how to find the signals with this strategy. Okay, so first, when I'm doing this strategy here, I want to look at the day here. Now, the disadvantage here, it does move, with Forex, it does move a lot, so you'll probably find a lot of the signals a lot more on the day, but it still takes a while. So, if you set it up like I have in the last couple videos, I'll watch the video to show you how to set it up, but I basically use Ghost Market Pro to show the overall trend, and I use the buyers sellers to kind of demonstrate long-term where it's headed. So what we can see right here, let's just find a couple of good examples here. Now, what we could tell, the best time to get in right here for the Japan yen on the day, if we're looking for this on the day here, we see what we want to do is we want to be here in the center of the buyers and the sellers. So what this basically does is it's when the buyers become sellers and the sellers become buyers. It's the best time, in my opinion, to actually get in for trades. So you can look at this at whatever time frame you want. If you're looking at this day, you're going to be waiting for a while. So you may have to go to, you check the day first, and then you'll go to the other time frames, the smaller time frames. But first we want to look at the day here, and the best time to actually have gotten in for the Japan yen here was right about here. You see right about here is when the yellow line crosses. This is basically when the sellers become buyers. At this point right here where you see it in the buyers versus sellers. So if you came in here, right about here, which is this candle here, and you just rode this out. Now, if you're doing this on the day, you're going to be waiting. A long time. Now, doing this strategy with Forex is different than the others because you're doing Forex. So it's not like you're buying contracts, and it's not like you're trading crypto. You have to start at a small number in the beginning because this moves up and down so much. And if you're doing this on the day, it's going to be fluctuating up and down, up and down, up. You want to make sure you have enough in your balance and your lot size to cover everything. Because if you do it on the day, you're going to be waiting a period of time, a week, 2 weeks. So it's going to be fluctuating up and down. To get those big results, it's going to be going up and down a week, 2 weeks if you're doing this on the day. So just keep that in mind. Do not make your lot size a huge number when you're doing this because it's going to be fluctuating up and down. You keep it low at first, and that's just my opinion. I can't tell you how much to put on your lot size. Just use your own common sense. Okay, so from that point on, if we rode it all the way from where it is right now, on the Japan yen, we are looking at 11 days with a 4,481 pip move. Now, let's just do the math on that real quick here. It's 4481. That is a 4,481x of your money by waiting a period of time. So if you did this at the smallest number, which is a penny, you would have made $44. So with one lot size, one lot, you made $44. At 10 cents, you made $448. So just do the math. You just make sure you have enough. So let's just look at a couple other signals here. Now, doing this on the day, let's just mark all the points where would be a good entry point. This one would have been a good one right here. Right about here when the buyers become sellers. And let's look at another one. Right here, where you see the yellow line crossing right down here. This is the next good point on the day, right about here. So we mark that one. Let's mark this one. Do this a couple times. So if you caught it here, this is when the buyers become sellers at this point, but you would have had to wait. You would have had to wait a long time for this, as long as you wanted. This is a 30-day wait. This is a 30-day wait for a 8,964 pip move. So do that math in your head. If you did one lot size, what was that? $89, I think. I'm not sure. I'm not going to point out my calculator. But basically, when you're doing it on the day, this is what it's going to take a while if you do this on the day. So let's just go to a smaller time frame here. Let's go down to a 4-hour. And let's go look at a different Forex pair. Let's go look at the British pound. Now, if you do this on the 4-hour, which this is kind of the average time frame that a lot of people like trading with, you'll still probably be holding your trade for a while, but not as long as the day. And the position that we need to find, it will happen more. So you see right here, this is when the sellers become buyers, and this is a good time to get in for your trade, right about here. So if you rode this one out, this took 3 days, not too bad. 3 days, and this is a 469 pip move. So let's just see if we find any more moves. Now you want to use your Ghost Market Pro to kind of give a good general idea of what the overall trend is doing. So let's just look right here. Right here you see it go from buyers to sellers right about this point right here. So that is this candle right here. So if you rode this one out, and you rode it out to here, you were looking at a 1,213 pip move. So, do your numbers accordingly. That trade was about, let's started here, right about here. How long did this one take? This one took almost 2 days. So, the 4-hour, you won't have to wait as long, and the trades will take maybe a day or two. It all depends on what you find. Now, the lower you get in the time frames, the harder it gets. But you can find them on the lower time frame. I'm not going to do that with Forex because I believe that you look for them on the day, the 4-hour. The lowest here would be the hour. That's the lowest I would do for this strategy. So you just got to look, and you look at your buyers, sellers. You look for the point when the sellers become buyers or the buyers become sellers. We see that moment right here. And if we came in right here and we rode this out all the way up here to the top, This is a 1,585 pip move, so do your numbers accordingly. Now, this strategy, you can also find retracements. When the yellow line gets past the green and comes back down, or goes back down to the red and gets past that point and comes back in, those are reversals. You can find good retracements during that moment. So if you come in here, you see on the British pound here that we see the yellow line coming back through the green. This is a sign of a retracement. This is something you can do, but I would stick to just doing it in the center, but this is also a good tool to use to find retracements. So this retracement here was 832 pips. You could have wrote it out longer if you wanted. Let's just see if we can find any other retracements. The yellow line has to get past the green and red zone here for it to be a retracement, and you have to look for it coming back through, which is like it is down here. That yellow line has to go back through it before you enter. So let's just see right here. Let's find it. You see right here, if you look at you see the yellow line going through the green, so this is a retracement. You can see that very easily here. So if you rode this one out, this one would have been a 1,000 pip move. Let's see if we can find one for the bottom. If it happens on the bottom. No, it hasn't happened for a while. Yeah, here we go. Here we go. Here's a retracement right here. You see the yellow line going back through the red, so this would be a buy order. Very briefly, retracement right here, and you just follow it back up. And this one is almost a 2,000 pip move. So you can see how you can find retracements with doing this, and you can find the moments when buyers become sellers and sellers become buyers. It's very powerful. I would recommend doing this on a demo account and practicing with this strategy. I would first practice on doing it when buyers become sellers and sellers become buyers. And after you tested that a little while, I would test it and look at retracements and things like that. But this works. This works really well. The only thing that is different about Forex and this strategy and what all the other assets that I'm going to cover, your lot size has to be small, because if you're doing this like on a higher time frame, it's going to be fluctuating up and down for longer trades. So you don't want to put in with the big lot size here if you're waiting a long time. Now, if you're doing this on a shorter time frame, you can get in for those quick little scalps. But me personally, I don't do it on a lower time frame. I see more benefit in holding trades long term. But you do have to hold these if you're doing 4-hour or the day chart. You do have to hold these for a while. So just make sure your balance is, your lot size is relatively small, so you can compound it over time. You can start small with one lot and then grow it over time, but I can't tell you how much to do in your own account. But definitely practice with a demo account. So anyway, that is looking at this strategy, this 2 paid indicator strategy with Ghost Market Pro and buyers and sellers with Trade Confident. If you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.